All right, we have huge breaking news. The regulators have just shut down the 33rd biggest bank in the United States, making this the third biggest bank failure in U.S. history. This bank had $110 billion in assets. Compare that to Silicon Valley Bank, who had $200 billion in assets. So here's a press release from today, March the 12th, 2023. FDIC establishes Signature Bridge Bank as successor to Signature Bank New York. Signature Bank New York was closed today by the New York State Department of Financial Services. It says we are also announcing a similar systemic risk exception for Signature Bank New York, which was closed today by its state chartering authority. So many people are asking, are these the first dominoes of many? We're already seeing companies starting to freak out. Coinbase has put restrictions on trading. I believe they banked with both of these two banks. Again, in quick succession, two dominoes have fallen, making them the second and the third biggest banks to fail in U.S. history. Wow, this is really not good. Another bank has been shut down by the regulators. This bank is called Signature Bank. CNBC is reporting regulators close New York's Signature Bank, citing systemic risk. This makes it the third largest U.S. bank failure ever, after the second biggest failure, which was just a couple days ago, with the Silicon Valley Bank. So this is going to be catastrophic to a lot of businesses. If you look here, it says 90% of the deposit balance were uninsured business accounts with balances over $250,000. And think about what these businesses do. Well, many of them employ people. So a lot of people are not going to have access to their funds. And a lot of businesses might not be able to make payroll. A lot of businesses might have to shut down. Obviously, if you lose a ton of money, it can be very hard to stay afloat. Think about this. The government just stepped in and took all of these people's money because the bank had failed in their eyes. The FDIC just seized all the assets. So the Treasury and the Federal Reserve put out a statement. So from Yellen and Powell, they claim that the U.S. banking system remains resilient and on a solid foundation. Somehow I really don't think so. This is really bad news. This could go south really quick. People are going to be panicking. And I worry a lot of people are about to lose a lot of money. A lot of good, hardworking people. This is absolutely disgusting. Now, there are a lot of huge companies that bank with Signature Bank. So this is the third largest bank failure ever. So we've had number 2 and number 3 this week. And the banks are going to open up on Monday, and I worry all hell is about to break loose. If you have your money in Coinbase, this could be very bad. Coinbase and other companies are banking with Signature Bank. And it doesn't really seem like any companies or any bank deposits are safe right now. This throws everything up into the air. So here's a press release from today, March the 12th, 2023. FDIC establishes Signature Bridge Bank as successor to Signature Bank New York. Signature Bank New York was closed today by the New York State Department of Financial Services, which appointed the Federal Deposit Insurance Corporation as receiver. So it says to protect depositors, sure. The FDIC transferred all the deposits and substantially all of the assets of Signature Bank to Signature Bridge Bank, a full-service bank that will be operated by the FDIC as it markets the institution to potential bidders. Signature Bank had 40 branches across the country. They claim all depositors of the institution will be made whole. No losses will be borne by the taxpayers. I mean, this is the government we're dealing with, so their promises are worth exactly zero. Signature Bank had total assets of $110.4 billion and total deposits of $82.6 billion. So another bank seized. Silicon Valley Bank was $200 billion. Now Signature Bank at $110 billion. Total assets. This is absolutely major. I worry that this is going to become catastrophic as this sweeps through the banking industry in the United States. This is really horrible. I want everyone to know that I'm cheering for you, and my condolences and my heart go out to anybody affected by this. Hell, I think I'll be affected by this in just a couple days. So it says basically the transfer of Signature Bank to Signature Bridge Bank, which is basically owned and operated by the FDIC, was completed under systemic risk exception approved earlier today. And this is that joint statement from Powell and Yellen from today. So first, Yellen approved actions enabling the FDIC to complete its resolution, aka seizing, of Silicon Valley Bank. It says depositors will have access to all their money starting Monday, March 13th. So I'm really not sure if they're talking about all depositors or if they're just talking about the FDIC insured depositors. It says all depositors. And the 13th is tomorrow. So this is going to be very, very, very interesting tomorrow, to say the least. I'm absolutely horrified at the prospects here. It says we are also announcing a similar systemic risk exception for Signature Bank, which was closed today by its state chartering authority. All depositors of this institution will be made whole. So the Fed also put this out. Federal Reserve Board announces it will make available additional funding to eligible depository institutions to help assure that banks have the ability to meet the needs of all their depositors. So I guess the Federal Reserve is just going to make a bunch of money out of thin air, give it to the banks. So nothing new there. So on Friday we had the second biggest bank failure ever in U.S. history with the Silicon Valley Bank. Look at all these major companies who bank with Silicon Valley Bank. So Jack Berkman here says some of the companies banking with Silicon Valley Bank: Airbnb, Coinbase, DoorDash, Dropbox, Eventbrite, Fitbit, HubSpot, LinkedIn, MongoDB, Robinhood, SpaceX, Tesla, Uber, Zillow, 23andMe, Atlassian, BOX, DocuSign, Etsy, Evernote, Groupon, Hulu, Indeed, Intuit, Kickstarter, and Peloton. Now this was the bank that crashed at the end of last week on Friday. And to be precise, it was seized by the regulators. Wow, look here. So apparently Signature Bank was the 33rd largest bank in the United States. And it's now totally destroyed by the Fed, the Treasury, and the FDIC. Table Salt says New York Signature Bank, the second big bank to fail, they bought $25 billion in bonds that pay only 2% interest. They owed $88 billion in deposits, yet only had $5 billion in cash. It's looking like the next week is going to be hellish for individuals and small businesses. Absolutely hellish. So apparently Coinbase had a $250 million exposure at the now debunked Signature Bank. Interestingly, Coinbase came out and they said, we are temporarily pausing USDC to USD conversions over the weekend while banks are closed. During periods of heightened activity, conversions rely on USD transfers from the banks that clear during normal banking hours. When banks open on Monday, we plan to recommence commissions. And notice the word choice there. They plan to recommence. Very carefully chosen words. This is about to get really bad. It's already really, really bad. But I think it's about to get a lot worse. Now, this is an interesting theory. Chase Perkins on Twitter says, Signature Bank didn't fail. Regulators capitalized on the opportunity to shutter a crypto-friendly bank, using the downfall of Silvergate and SIVB as cover. He also says actions taken are nothing short of nefarious central planning, per Operation Choke Point 2.0. So is this an attack on crypto? Or is the FDIC truly coming to the aid of small depositors? Very, very, very concerning all around. And that's interesting for the crypto companies to be hit first by the bank closures, if this is a series of dominoes. Because crypto is an alternative to the banking system, to some extent. So if the banking system's about to be imploded, controlled demolition style, then it would make sense for the government and the powers that be to go after the crypto companies. And then they can turn around with more regulation and be like, well, we can't let this happen again. What, you mean how you just seized banks? What exactly are you trying to prevent happening again? You just seized 2 banks. So it's still up in the air as far as I can tell whether it was a good decision for the FDIC to seize all the assets. It seems to me their cover story is that they were trying to protect the depositors' money. And so they were implying that the banks couldn't do this themselves, and they need to step in, forcibly take all the assets, and deliver it back to the people. But I don't really believe any of that. And there's another issue here I don't really hear people talking about, and that is if people can't get their money out of the banks, People aren't going to be able to buy food. People aren't going to be able to pay their rent. We very well might have huge, colossal riots in the next coming weeks. This is pretty concerning right here. Percentage of deposits at select banks that exceed the FDIC's $250,000 insurance cap. Numbers 2 and 4 have been killed by the regulators, leaving Bank of New York at 98%, Northern Trust at 96%, Citigroup at 85%, JP Morgan at 68%, and PNC at 56%. So it's important to note that these are major crypto banks. Coinbase used both of them. It's still hard to see how this is going to affect the crypto market. So the New York Department of Financial Services basically seized this bank, with the help and approval, it seems, of the Treasury and the Fed. So a major story here is that Coinbase had $240 million cash at Signature Bank, the bank that was just seized by the U.S. regulators. Is this an attack on crypto? And this is interesting too. The Crypto Lark on Twitter says, so they shut down Signature Bank. Wasn't that like one of the last banks working with crypto companies? So this is major. This is absolutely major. And it might be a coordinated attack on the crypto holders, on the very crypto infrastructure, by attacking some of the major players, some of the major companies supporting it. Wow, look at this from Coinbase. All client cash at banks continues to be protected by FDIC pass-through insurance. Due to the FDIC's hold on Signature's transactions, we're currently facilitating all client cash transactions with other banking partners. So as we mentioned earlier, they're saying that they have a $240 million balance in corporate cash at Signature. As stated by the FDIC, we expect to fully recover these funds. I don't know if I expect as much. I'm hopeful everybody gets their money. So I'm wondering if they're lying about the depositors being made whole. It seems like they would really want to stop a run on the banks. And that's why they keep assuring people, oh, it looks okay today. Yeah, we can't make any promises, but it looks okay today. So one thing's for sure, tomorrow and the coming days and weeks are going to be absolutely nuts. Absolutely bonkers. As people and companies try to get the money out of the banks and find replacement systems that they can use going forward. This is terrible.